Welcome to the House Hacking Success Podcast, where you'll learn the path to free rent and financial freedom through real estate. Featuring your hosts, Brad Labrie and Drew Klingler.
Welcome to House Hacking Success. We're so glad you're here today. It's Drew and I from the House Hacking Success Podcast, and we're excited for today's episode. We've been gone for a little bit. The real estate market has been just insane. Drew and I have been super busy, him in the IT industry, me as an agent. But we're so excited to get back to the podcast. We started a new podcast, which is House Hacking Success Clips, which is just short 3 to 5 minute clips of this podcast. It'll be phenomenal for you to digest that information.
Yeah, that's actually a pretty cool podcast. You can get like 3 to 5 minute, quick clips. I think first episode is Matt Picaro talking about the 60-second hack to finding 203K lenders. And, it's just real quick. You're going to learn something very valuable in a short amount of time.
Yeah. And that lesson of finding the right people for your team is invaluable. Coming from me, who did a 203K, who used a lender who had no idea what they were doing. No matter if you're doing something specialized like a renovation loan, which is what the 203K loan is, or if you're just getting a mortgage, your team, you want to have great team members. You want to have a good agent. You want to have good mortgage guys. So do some research, talk to them, look up their backgrounds. But that 60-second hack allows you to see which mortgage broker is doing the most 203Ks in your area or in your state. And so, if you're in Baltimore, Maryland, you can look it up and you'll find out who that is. If you're in Detroit, Michigan, like we are, you can look it up and find it out. If you're in New York, if you're in, LA, no matter where you're at, you can look it up and it'll have state specific and area specific data. So such a great hack.
Yep, absolutely. So search House Hacking Success Clips on your favorite podcast app if you want to check that out.
Absolutely. So today's episode is going to be about why it's still a great time to house hack. I know throughout the entire country and certainly the state of Michigan, as well as many others, the real estate market is just insane. I mean, it's something we haven't seen this in over a decade. And so a lot of people are reaching out to us and saying, listen, like, it's just insane right now. Like, is it still a good time to buy? How can I be more competitive? All my offers are getting beat out. And so it's time to kind of discuss that. Like, is it still a good time to house hack? And Drew, you and I think it is, and we have a few reasons. But first and foremost, let us remind us that it's all about the numbers. And it's really just all about, are you able to decrease your living expense, buy in a good area, and live for free? That's really what we're trying to do. And not every property is going to be able to live for free. But if you can cut your housing expense by 30, 40, 50, 60, 70, 80, 90, percent, if you can cut that housing expense, it's a big win.
Yeah, absolutely. I mean, a lot of people might be looking at the market right now like, oh, the market's up. I shouldn't buy, I shouldn't house hack. It's a bad time to buy because prices are up there. I mean, interest rates are low, so, it might even out. But the point is that just because the market is up doesn't mean it's a bad time to buy. Just like you said, it all depends on the numbers. If you're going to be able to live for free or cheap, it makes sense, but also make sure, is that property going to cash flow when you leave? I mean, if those numbers align, why wouldn't you buy?
Yeah, absolutely. And that brings us to our second point, which is interest rates. So 2 points on this. First, interest rates going to lower your monthly payment, right? So it's going to allow you to cash flow at a greater number monthly. But the second thing to consider, right, specifically when you're buying in these areas where everything's going over asking price quickly, right? If you look at just a $300,000 property, right, over the course of 30 years, you look at the difference between a 5% interest rate, which is what the market was when I first started house hacking, versus 3%, which is kind of where the market's trending right now. So you look at just a 2% difference, 3 to 5, right, percent interest over 30 years on a $300,000 mortgage. That's over $120,000 just in interest payment saved. Okay, so there's number one. Plus the difference between the monthly payment and 3 to 5, right? There's a few variables there, but that's going to be a lot of money as well, saved monthly. So your cash flow on a monthly basis is higher. Your interest paid over the life of the loan much lower. So that's another reason why it's still a great time, because when the market cycles, right, we're in a hot cycle now. At some point, and it doesn't mean it's coming soon. It could. We don't really know, right? But at some point, the market is going to cycle. which brings on tough times, which means that interest rates generally go up. Or if they don't, it's going to be much, much, much more challenging to access financing. And so, you got to consider that when you make a decision.
So it also brings up a lot of opportunities for refinancing, right? So interest rates are going down. A lot of people are refinancing, bringing down those payments. One cool thing too is if you're in an FHA loan, you're paying mortgage insurance. Maybe you move to a conventional and you still have to pay mortgage insurance because your loan to value is too low. But that mortgage insurance is going down. So not only are you going to be able to drop your interest rate over 1%, depending on where you're at, you're going to drop your mortgage insurance down and you're going to be able to take a couple $100s off that payment.
Yeah, absolutely. And the next point is that if you want to be a real estate investor for a long period of time, right? And you want to build a track record, you want to be able to take on private money or partner or just convince people in your market, the big hitters in your market, that you're a real player. You got to build a track record, right? And there's no better way to build confidence, self-confidence, and a track record than getting that first deal, because no amount of books or no amount of seminars or no amount of podcasts you listen to are going to give you the confidence or the awareness of your first deal, because there's just so many things involved in a real estate deal. You're going to learn so much. You're going to realize that it is a little bit easier and more difficult. It's both ways, right? Like the process is a little more simple than a lot of people think, but at the same time, it's a lot more complex than people think, right? There are a lot of moving parts. And so you're going to get involved with that. You're going to learn a ton. It's going to, everything's going to come at you 1,000 miles an hour, but then things will start to slow down and you realize that real estate is a little bit predictable and there is a rhythm to it. And there's a rhyme and a reason for everything that happens within the industry. And there is, the best practices within the industry. And so that confidence will parlay into building a track record where you can go to somebody and say, hey, listen, I got this deal over here, right? I've been dealing with tenants now. I bought it at this amount. I cash flow at this amount. I live for free. I don't have any expenses. I've saved up this much because I haven't had a housing payment. Lend me money to buy my next deal, or let's partner and buy the next deal, or whatever it is. You now have something to have a track record, or going to bank, right? Getting your second mortgage. Getting the second mortgage is really challenging, guys. The first one is easy. Getting to the second one, take it from me, is really challenging because, you got to build a track record. And so it's not just going to be buy your first one and go to a bank and get a second one. It's not that easy. You got to build a track record. They want to see, especially if you're going to offset your mortgage payment, you got to get 1 year of taxes that show the rental income and all of that, right? There's just a lot of things to it. To this real estate game. And so getting in is really important, very important.
That's what's so special about house hacking, right? I mean, the low barrier of entry, you can get an owner occupied loan, low down payment, and you can get in early, get in quicker than if you were going to save up and just buy a rental property for 20, 25% down. You start building that track record sooner. So that's a really good point, Brad. And, that's something that I think like a lot of people want to start taking on private money. They want to become real estate syndicators and all that. And the sooner you can buy a house and the sooner you can get more rental properties, the quicker you're going to build that track record and get closer to those goals.
Yeah, absolutely. So I have a friend in Fund That Flip, and we were talking this past week, and I had just asked him, hey, listen, who are you guys? It's a hard money lender. And I said, what are you guys' criteria right now? And right now, with everything going on, they're only dealing with people that have a minimum of 2 deals under their belt, right? Track record matters. Okay. And take it from me, who work with the big investors in my area. I talk to them, I speak to them, like what's going on. The private money lenders, I talk to these guys. Hey, like, what are you looking for? Track record and character above all else, right? You can bring them a home run deal, but with the amount of uncertainty in the world right now, they don't care. They want to know, do I trust you as an individual above all else, right? If you get a highly, capable person with a great track record and, he has a great name around town that brings a mediocre deal, a private money's probably going to go with them over somebody that has no track record with a great deal. I mean, it's just a matter of fact right now. And that's not always the case. But my point is, building a track record, building confidence, I think are the 2 greatest variables to your success. And so it's still a great time, in our opinion, because you can still find properties where you can live for free or come close or considerably lower your housing costs, and which makes it still a great deal. The next point we have is what Warren Buffett talks a lot about in the stock market, which is dollar cost averaging. And for those that are unfamiliar, what he talks about with dollar cost averaging, take for instance Coca-Cola. Okay, and a lot of people are worried, when the stock market's up, should we sell because it's gonna tank, or when it's down, people are scared that the whole world's gonna blow up and it's just gonna continue to go down. His thought process is to remove the psychological and mental barriers from investing, right? And he does a very, very good job of that. But he talks about, if you find great assets like a Coca-Cola, if you just buy, no matter what the market does, you buy it when it's at the top, you buy, maybe a little bit less when it's at the top, maybe not, but in a lot more when it's at the bottom. But if you just buy, right, no matter if it's going up or down, it's going to average out. And your stocks are going to continue to rise. Your average is going to continue to rise because the U.S. stock market rises considerably over time, right? If you look at charts. And if you believe that the U.S. is still going to be here as a country and still going to be growing in 20, 30, 50 years, then why not invest in its blue chip stocks? That's his motto, right? And so we take that a little bit into consideration in real estate, right? If you think that in 20, 30, or 50 years, that U.S. real estate is still going to be one of the best asset classes in the world, which it is right now, then why not dollar cost averaging, continue to invest in dirt in the United States?
Yeah, I mean, when you think about trying to time the market too, if you look back, like say you were looking at buying a house in like 2017, you're like, maybe I'll wait because, market's kind of high, it might go down. It was here and now it's here. Like you just don't know. It could, there's a lot of opportunity you could have missed out on if you were just waiting for a market crash. So,
and I was investing back then, right? And I had those thoughts. I had those exact thoughts. That's why I stopped flipping, because I was like, man, the market's way too hot, But in retrospect, there was no better time to flip than in that 16, 17 period, right? And, and so I wasn't wise enough to do that. But I digress from that. The point is that even if we hit a, serious 20% decline in the real estate market, it probably won't go back to that 16, 17 marks, when I was really involved with that. And so it's generally a good time, especially with what we do, to invest in real estate. If the numbers make sense, if you can live for free, right? And you get in good areas with low down payments, your money's going to come back so quickly, right? My brother is buying a duplex right now. And, we were talking through this as well, but with the low cost of entry to get in with an FHA at 3.5% down, you get that money back so quickly, right? And you live for free. You build so much confidence. You build a track record, which is more important, in my opinion, than anything when you're young or when you're a new investor. There's nothing more important and nothing that gives you more credibility than having a deal or two, right? When I see it all the time. And so in our opinion, it's a fantastic time to invest. So to wrap it up, right? It's a very tough real estate market, no doubt about it, right? Everything's going over asking price. People are bringing in cash offers, and people are guaranteeing appraisals. I mean, there are things that haven't been done that often in real estate happening on almost every deal that I'm associated with, that I hear you guys associated with, right? It's a really, really challenging market. But the point is that confidence, that dollar cost averaging, that building a track record, that low interest rates, these things are all positive for you as an investor if you want to do this for a long period of time. Because what if the market continues to go up? I don't know if it will. What if the market goes down? The point is, no matter if it's going up or if it's going down, people are still going to need to rent homes. And so if you can weather the storm, if you can, still buy a property now, cut your costs, get that money back, put it back into other real estate deals. Real estate and house hacking is still the best strategy out there for new investors.
Yeah, absolutely. And I mean, house hacking is a low barrier entry, like we keep talking about. It's a great way to get started. And I think everyone should consider it if they want to get started in real estate.
Absolutely. So we appreciate you guys joining us today. It's a short episode. We have some incredible guests coming up. We're excited to bring them to you. Subscribe to our new podcast, House Hacking Success Clips, and check out all the short clips that we're going to provide for you. But we're super excited to be back at it and provide you guys great content.
Thanks for listening. If you could do me a huge favor and go give us a 5-star rating on iTunes, I would really appreciate it. It would really help us out. If we provided any value, please go do that. Otherwise, There's a lot of people who haven't subscribed, so go ahead and go subscribe and you'll get notifications when a new podcast episode is released. Thanks again, everyone. Have a great day.